Hello. Thanks, Scott. Andy is, I think, grabbing some coffee. He'll be right back in his chair at the right moment. So we can get started with the trade of the week. Every Tuesday, we see you guys here. Quick reminder, the disclaimer. Everything you see and hear on this webinar is being broadcast as a software as a service provider. We are a subscription-based software company. We are not registered investment advisors. We're not brokers. We don't have those licenses and the ability to do that. So if you're looking for financial advice specifically tailored to yourself or your family, please don't consider anything you see or hear today as such, and then we're all good. So auto trading is going to become a lot more talked about at Trade Ideas as we move forward. The Brokerage Plus tool is coming out of beta, and it's actually out of beta now, and we have a push currently to allow people to be one of only 1,000 subscribers that can turn on the AI and connect it to the AI Holly, which will happen sometime in late January 2019, I'm told. So if you're looking for more information on this tool, you can see it there at tradeIdeas.com/brokerage plus. But let me please put a caveat, a disclaimer in here. This is not a tool to come in and circumvent market knowledge and understanding of what's happening. It's not a shortcut to success. It's a tool to help get you to success. Please don't think that this is something you can just come in, turn on, and walk away from and have it work for you. It's not that simple. Nothing in life is. So good to know. Learn to walk before you run. This is a running tool right here. You're not alone with Trade Ideas. We have numerous hours every week where we make ourselves available to y'all. Whether it's Barry's trading room here on the right, the screenshot of his trading room, hundreds of people in there every day, a lot of qualified people as well, giving some good market insights and good real-time things to watch in real time. And then Barry himself is a saint in terms of moderating that room, keeping everybody on focus on the market and helping people with Trade Ideas technology and his desktop. So if you're not in there, you got to ask yourself why, because it's free. And this type of content that you get in there for free is literally being charged, 50 to $100 around the industry. So save that money and come on into our room. And I guarantee you'll learn a few things for sure, especially if you're a newbie. So there's that. And then there is the afternoon webinars, which we are on right now, the 5 o'clock Easterns. Yesterday I helped Jamie. Today is myself with Andy. Tomorrow is Brad and Dan, although I believe tomorrow is canceled. Check your email for that, being a pretty hard weekend. I'm thinking the market's going to be a little quiet, but after today's action, who knows? We'll see. We'll get into that. Trading Studio on Thursday, where Andy picks up some content and drops on you guys. And then Friday, we have no afternoon webinars, but we have a 3-hour session. And again, this is during normal market hour weeks. Friday this week is going to be a half day. Everybody's pretty much going to be out of here by 1 o'clock Eastern. So, but during the normal weeks, we have a 3-hour come one, come all free session. It's a great place for newer users who just subscribe to come in and really get a way to hit the ground running. A lot of people come in and say, hey, how can I create a scan? This is what I'm looking for, guys. And we have a lot of fun in there creating scans in real time and helping people get the most out of the software. That's on Fridays. Now, during the week, in the mornings, I'll go to the next slide here, we have the Trade Ideas University. So it's open to anybody. It's also been pre-recorded, but we do a live version Monday through Thursday. We start off with beginners on Monday and finish with more advanced topics on Thursdays. That's the Trade Ideas University. And again, it's about over 6 hours worth of content. You can watch it live, attend live, or you can come in and view the video link that I have. I just had a brain fart there. I was thinking about something I want to help show later on this afternoon in this webinar. Yeah, Wally, this is probably going to be the last webinar of the week because the afternoons are going to be a little different now going forward. So man and machine combined, this is the theme for the week that I like to talk about. No man is better than machine, but no machine is better than a human with a machine, meaning the human discretion coupled with the technology of a machine, in this case Trade Ideas, is a very powerful combination. Much more than, like I just said on the prior slide, coming in and expecting to plug into the machine and have the machine do everything for you. It doesn't work that way. It's not quite that easy. All right, so let's get right into it. Did you join us yet, Mr. Andy?
Yes, sir, I am here.
Right. Andy's here. Yep. So we're gonna go through market recap. I have a few things to say for sure about the market, and Andy's going to talk about some Holly AI recap today. We'll get to the trade of the week, and talk about the genesis, the idea, the entry, where it is now, and what might happen. And then I'm not really going to dive into too much Trade Ideas content for the remainder of the webinar. I want to take a moment to look at my sector list with everybody, because the market is certainly broken right now. We'll get to that in a second. And I'd like to see what sectors are holding up and what sectors are not looking so good. And then we'll probably finish up with chart requests. I don't have any marked up charts to look at and watch today. There's too much carnage out there. There's nothing really setting up in a nice semblance. But if there's anything you guys want to look at, we'll finish up the webinar doing that for sure. All right, so we'll come back to that. And let's start off with the SPY, the spiders. I talked a lot yesterday about this, and I'm going to talk a little bit more today. Again, this is where the bulls lost control of the market back here in early October. It was not another buy the dip to move higher. It was a plunge down through all these support levels, 2 days of hard carnage on unfathomable volume here. Well, then we talked a lot about the moving averages kind of holding the price down, and then we bounced up in a nice pro gap reversal, and we started to talk back here. Is this going to be the beginning of a base that we could build, maybe on this 200-day, that we could build and look for higher prices? Well, we didn't get that. We didn't get that at all. We got it drop back below, and then a lot of choppiness underneath these moving averages again. Now, we had that 10-period moving average trying to curl back up a few weeks ago, but now it's starting to roll back over. Not good, especially when you look at the price there. The price has been encapsulated. Those don't translate. The price has been encapsulated and held under this 10-period moving average. And I said yesterday, there's still a shot. There's still people that could be holding out a chance that this was going to be some kind of an inverted head and shoulders base building that we could move higher from. Well, today I think proved the point that that's not the case. There's a lot of damage out there, and everything is broken in terms of these charts now and the indices. We just got to see where we're going to go from here. And the funny thing is, and I talked about this yesterday with Jamie, and Andy will know what I'm talking about. Typically, when you look at seasonals or seasonality price behavior, this week, this Thanksgiving holiday week, and then the week of Christmas is usually a nice slow grind higher, and they call that, the Santa Claus rally. We're not seeing anything like that. This is a very unusual. Typically, these are quiet weeks with low volume. We had nothing of the such today. We had a gap down, an attempt to rally, and then roll back over close to lows on pretty decent volume again, I might add. So the S&P was holding up okay relative to what I'm going to show you next in the NASDAQ and the Qs. But after today's candle, I think we've got some serious problems here that we're going to have to deal with. Let's go ahead and take a look. I want to show you something in the NASDAQ that happened. All right, so NASDAQ, not so much in the camp of maybe possibly putting in an inverted head and shoulders, because it was kind of a lopsided shoulder. But what I did notice, actually, Sean pointed this out on social media yesterday. Back here, our worst close was that candle right there. The following day, we traded below and we bounced back up. So what we had yesterday was a new closing low. Closing prices are very important, more so than intraday prices. So the NASDAQ went home last night, closing on new fresh lows in terms of this recent craziness we've had. And it doesn't take much to see. Look at that volume. This was market 1.0, okay? And now we're in market 2.0, the land of volatility and craziness goes. So the only way you can survive this kind of stuff is, trade half your normal share size, downsize on your shares, allow for that volatility and that wiggle, because these volume spikes and these candle daily ranges are insane compared to what we've had. So I'd like to talk about something else. People are not really ready to use the B word, the bear market word, because you can't. By definition, a bear market is something that's down 20%. Well, our S&Ps and Qs, I think we're in the 10 to 12% range here as of late over these last few plunges lower, but we're not in bear market territory. But let me uh, let me pose something here. This is about as ugly as it gets. This is Facebook. Now, you guys all remember that acronym that was just the darling of the markets for about 2-3 years. Oops, I have to put another A in there. The Facebook, Amazon, Apple, Netflix, Google Trade, the FANG acronym. These were the darlings of tech, the darlings of social media, the darlings of the internet, driving us higher month upon month, year over year. They are nothing like what we had in the past. As a matter of fact, I would dare mention we are in a bear market, deep in a bear market when it comes to the FANG stocks. All right, here's Facebook down 40%. Here's Apple. Oops, here's Apple down 20%. That's bear market territory. Shit, even more today with that gap down. That looks horrible. Notice how Apple tried to hang out at the 200-day moving average, but had nothing of it. I mean, we are so oversold now in this thing. It's incredible. It's probably due for a bounce at some point, but Apple's in a bear market. Facebook's in a bear market. Amazon's in a bear market. It's down 20%. Netflix is down 35%. Netflix is in a bear market, and Google's down 20%. So everybody loved these stocks on the way up. We better be paying attention to them on the way down. Now, I'll dare say it. We're in a bear market big time when it comes to these FANG stocks. Now, whether they're going to continue to erode and bleed the rest of the market lower, the financials don't look great. We're going to look at some sectors later. There's a lot of ugliness out there, and these FANG stocks, these tech stocks, have led us higher. Well, the theory is they could very easily continue to lead us lower, for sure. Some other thoughts that I had. Go back to my cursor. Here's Germany, guys. Germany was flirting with big support here. They're having a rough time over there in Europe, and we've been looking at Europe a lot in this market. The thing that's the ugliest of all, the biggest German bank, not only the biggest German bank, but the biggest derivative bank in the world. If you don't know what derivatives are, I recommend you look it up. It's the kind of thing that caused all the trouble that we had in 2008 with AIG and all their parties and counterparties to the derivatives and the things that were being traded. Things we don't even freaking understand are being traded. Well, Deutsche Bank is the world's global leader in derivatives. They are now at an all-time low. That's right, I said it, not a 52-week low. They're at an all-time low. This is not good, and I'm surprised more people are not talking about this. What about Credit Suisse, another European bank? That's hideous. Look at the volume here. There is damage being done in the European markets and the banks. So I'm not surprised that we did not, in fact, close on anywhere of an attempt of a rally or a ramp today at the 330 mark. The seasonals, as I mentioned, are off. Lowest close yet in the NASDAQ. Not looking good. I want to call your attention to also, a little bit of agreement. JC Paredes. If you missed his talk at the Trade Ideas Summit, you missed a good one, because this guy was talking about everything we see here. He was talking about all this back here. We had just bounced, and everybody thought we were just gonna. It was the dip to buy, and JC said no. There's more market crash on the table. Those were his words. And so, if you follow him on social media, he came out today and just kind of said what I just talked about. I get asked a lot what you're looking for in the stocks to air to the long side. My answer is the breadth is improving. Well, that breadth is not improving. He says we're seeing expansion and downside participation. That's why I just showed you the European banks along with the FANG stocks. We're not seeing an improvement in breadth. We're seeing an expansion. And I had to have a little fun today with the memeology, but the this is fine dog as the fire burns around him, that Deutsche Bank is the largest derivatives, hitting all-time lows. So there's a lot going on out there, more so than it probably seems to be easy to keep your hands on. But when I see those European banks doing the things that they were doing, that's pretty concerning. It's pretty concerning. What else do we got here? I'm looking at my notes of stuff that I wanted to talk about today. Well, I guess that's about it. Andy, you want to add anything to this nonsense?
Well, no, everything we've been kind of talking about this for months now, and I remember in my last Thursday after we had 2 days of bounce, and pretty much saying the same thing. It's just it's ugly. It's ugly, and we could go a lot further. And Steve and I have both traded through some pretty nasty, gnarly bear markets, and it can go a lot lower. And I'm not seeing any really signs of any reasons to jump in right now. But
No, not at all.
it's nasty, and it looks like it's going to go lower. Time will tell, but you said it all, man. You painted a pretty gloomy picture, and
well, this is the anatomy of what happens when the markets turn. Buy the dip no longer works. It becomes sell the rip. And this is a great example of a rip that was just waiting to be sold. And look at us now. We're back down here to those lows. They're going to be tested, I bet. I bet you they're going to be tested. So trying to get our focus from buying the dip to being patient and waiting, and then fading and hitting and short selling the bounces, the dead cat bounces. Those are the ways that you survive in a market that breaks. It's on the other side of the mountain. This market is without a doubt on the other side of the mountain, to use an old expression. Also, I think I noticed that technically the Nasdaq, the Nasdaq is very close to a death cross. All right, this 50, when it crosses the 200, will be called the death cross. That's going to shake a lot of people, and I guarantee you'll see some headlines when that happens. Ironically enough, the IWM has already had its death cross. Its 50 has already crossed over the 200. So the IWM was also leading us higher a lot and was one of the first indexes to break. Well, now we have a death cross last week in that one, and as I said, coming up real soon, the Nasdaq may have a date with its respective death cross. We'll see. It's getting, the margin is getting pretty tight right there. All right, so yeah, that's pretty much a lot of the notes I had to talk about. There's a lot going on out there for sure. And again, I drew that little 1/2 signal. The only way you can survive in this market when the volatility kicks up like this is to get small and let the elbows get thrown. I think somebody was talking about NVIDIA gapped down 13% and then rallied another 9% or 8%. Just crazy moves today. So you can still make money out there, but you've got to be nimble and you got to do it with small size. All right, well, that's all I got for the market recap. There's a lot going on, but we'll talk more about that in the session.
Yep. And you guys can learn a lot. I mean, those of you who are trading and never really experienced a bear market, trust me, I've seen it. Me and Steve both have seen it wipe out who we thought were very, very good traders. I mean, we're talking about people who blew up $15 million accounts because they were so accustomed to just buying the dip, and for 10 years. It was back in the 90s, the longest bull market ever, and boy, they found out the hard way that price can go in the other direction.
And that was a teachable moment for Andy and I. We were like, whoa, wait a minute. Those guys that we had so much respect for just blew up their account? Okay. Mental note.
Yeah, absolutely. All right, so you ready for me to take the wheel here? All right, so let me kind of minimize everything. I'm my father-in-law, so I'm on my laptop here. I don't have my dual screen, so let me. All right, you got me?
Not yet. Now I do.
I don't know what's going on.
No, I see you.
It's just a little slow. Okay, yeah. I remember when I get here, for some reason, every time I start my screen share, the system starts to really lag. I'm looking at my bandwidth on my latency on my trade ideas, and it really starts cranking up when I start my screen share. I'm not sure why, but country internet, I guess. Yep. All right, so guys, let's take a look at Holly today. And why did I just do that? Didn't mean to. And where is that bad boy? Let me just do this instead of trying to find it. Low layout, default. Let me stretch it this way first, and it's a lot easier to grab. So we were talking this morning, and let's always pull up the spiders here, kind of see what we were looking at. What Holly had to work with today, because everybody, well, most of you know who are in here, Holly does exit all our trades at the end of the day. We do that for reporting, makes it a lot easier. We had a gap down in the market, looks like we were heading down. Holly did, had some directional bias here, we thought, going in a direction, and then lo and behold, we catch a nice little bounce here in the market, and Holly starts going long. Well, when you have days like this, we talk about risk on, risk off, but it's actually hard for risk off when you have, gyrations where you go from highs to lows, back to highs, and then back to lows, and then bounce, and pretty much put in what's called a spinning top. You can see it there on the daily chart. So Holly kind of had, I was looking through all of her, this is Holly Grail right here. You can see, few more longs than she had shorts today. Let's take a look at Holly 2.0. She, I think, had more shorts than she had long. And we'll talk about Holly Neo here, which was the big winner. And she had, or maybe a he, about an even number of longs and shorts. So it was kind of, a lot of strategies, a lot of strategies we're setting up. Obviously, that's how you get price alerts. All the filters have to, meet the requirements, and you have to have that alert. Everything has to line up, if you will, and that's how you get these alerts when it comes to the AI. And, had a pretty much an even number of longs in short today. Not a bad day. I mean, Holly Neo and the risk on finished up. Let's put Holly Neo in over here so you can see. Come on, baby. All right, so we had a risk on profit of 503. This is using a $200 stop loss based upon risk on the amount of stop. Not going to go over that today. I usually do it every segment, but you guys can find out more information if you want to go to the TI University playlist and go to 201. Steve talks about that. So anyway, risk on was 503, but let's sort by profit and risk off and risk on. You can see there, risk off pretty much flat, $19 on risk off. But if you would have held everything until the close, you would have made $503. That's risking $200 on every trade. So, some pretty decent trades today. There were some in here I thought were pretty decent. I want to show you an example of, because we get so many complaints about people saying the slippage. I want to show you a case where slippage can work in your favor. Okay, this would be in BKH today. Here was one pulling back. Okay, we got an alert at 9:44 Central Time today that this is on support. You might want to take a look at it. Well, you can see here it went much lower. So guys, keep in mind when these contrarian plays come on, when you have these on supports, we'll take a look at a few more, see if there was better prices. But for the most part, obviously in the losers are going to be better prices because they keep going through. But a lot of these ones, guys, you can get much better price, than what the alert comes out at. So wanted to show you an example. Here's one that went off and got not too far from the stop price, and then had a nice little bounce, and pretty much, nice looking little chart there on the daily. This is one that's definitely outperforming the market. Don't know if it's a market, in markets like this, guys, I'm quick to take profits, like we tell you all the time, kind of in the trade of the week, and when you get in this market where the market has just, a lot of bearish action, I wouldn't look at this and look maybe for, a long-term swing trade. I'm looking for something like this and maybe get out quick after about, a day and a half, like Steve always says. But there's a good example of a trade today that you could have got a better price. Downward dog here. This one actually finished better in risk off. Okay, there's a nice little trade there. No pain. Continue to go with it. And you can see it got out at risk on risk off here at $237. Roku. Another example of a really good entry. Fires off, no pain. What I mean by that, never went against us. Okay, immediately in the money, traded down, a little bit of a return there, but with this market with no direction, one way or the other, it was hard to get those nice winners like we got yesterday. Yesterday was an incredible day for the risk on because we had a market that trended down, pretty much all day. Holly killed it. She was all short. You're going to have days like that, and you're also going to have days like this. What you're not going to find with Holly are days when she just gets destroyed on risk off because, she's not going to let, stocks just continue to run against her. But Steve, not a whole lot to talk about, as far as, a few individual trades there. And you can see, I think for the most part, the shorts outperformed the longs today, even though the market was kind of sloppy and back and forth. I noticed that, a lot of the winners were shorts today.
I actually have something I can show. I've got something I can add to your repertoire. Okay. So
go right ahead.
Excuse me. I'll take it back over. I'll have to take the screen. I'm gonna have to show my screen. So I will do so.
Okay.
All right. So this morning I had you guys in mind, and I wanted to harp on something that I always talk about: the AI and the bigger picture. What is the directional bias? What's going on? So there were two significant moments this morning on the open. You can see by my chart where we are here. This is the basically opening 15, 30, 45. We were 45 minutes into the market, and the S&P Qs gapped down. They came up a little bit, and then they rolled back over to lows. What do you notice? Well, I've already circled the answer for you, but what do you notice about what the AI is doing at that moment? 3 shorts, 2 shorts, 2 shorts. There is not a single long trade on here 45 minutes after the bell when the market looked like it did right here. So what is that telling us? Well, that's telling us that the statistically probable non-emotional path of least resistance tool that we've created here called Holly is giving us some information. That is, if you're trying to go long right here, odds are not in your favor. So directional bias, is the AI all short? Well, at one point in the day it was, as the market was getting weak, and we did go lower from here. But markets are funny. They are quick. They turn, they bounce. Even though we did finish today lower, we had a real oversold bounce attempt. I'm going to highlight, this Q chart here. That little candle, that green candle, pushed up and took out. It was actual bar reversal from the prior 15-minute Q candle. Guess what happened to Holly? And I screenshot it as quickly as I could because I wanted you guys to see the freshness. That yellow strip that indicates these things just came through, and pow, 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 3 of them in a row, and they're all longs. Well, the selling has probably been abated, guys. It might be time to either cut your shorts or get ready, hold your, hold on to your socks because a bounce is coming. So you can get these cues that I call directional bias cues, throughout the day. Maybe the AI is really quiet, and all of a sudden some news comes in, and bang, 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 6, 7 shorts appear. You better be careful if you're long. You better not be thinking about going long, and if you are, it's your account, it's your discretion. But man and machine, that's our weekly theme around here. The discretion trader looking down and seeing the AI showing the path of least resistance has now bounced. The selling has abated and the buyers are stepping in. This in itself is one big alert, guys. Okay, so just trying to highlight that where we can. Don't get so caught up always on the individual trades. What's the bigger picture? Here's another bigger picture item. 12 trades, 13 trades, and 13 trades is not a lot of trades for the AI. That's rather on the low side. So the trade count, even in itself, was a little low. So the AI was showing that it was being very selective in terms of what the market was giving it today. So, all right, I just wanted to end with that because I had a couple of screenshots and I almost forgot to show them. I took the time to make them, so why not put them to good use?
No, that was good. That was good stuff.
So now we're going to venture into trade of the week. Now, for those that have been around a while, this is the 3rd attempt at a trade of the week where we are buying a pullback. Why are we doing that, guys? Have you seen the market? We're in for some gyrations and some volatility. So with this type of backdrop, Are we going to be picking stocks making new 52-week highs that all they have to do is break a trend line, and before you know it, it's down 8% on the day? Because trust me, that's when those things happen. Stair step up and elevator down can break a trend in one day and break a lot of accounts. So we went back to the well, looking for something that's basing. Here's a nice base. If we're wrong, and if the stock triggered and the market puked and the stock started to sell, it's not going to have as big of a break as it would have if we were calling it up here. See what I'm saying there, guys? So this is a much safer area for entries if they don't work. This is the kind of stuff we're focusing on. So with that said, zoom in a little bit, and again, it was not a breakout, but a pullback, because I think that worked pretty good right there, actually. No, we only had that extra day. Let me see if I always try and nail these things perfectly if I can. There it is. Got it. So here's what it looked like going on the weekend, guys. And you've heard me say, do not be the person to buy that fifth green candle after you feel like the herd is moving in the right direction and you feel like it's safe. Little word of wisdom, guys. You're not going to last long in the market if you chase with the herd. You have to be contrary to the herd, meaning, looking for a decent stock after a couple of days pullback. Maybe that's the area you might want to be looking at. But that's not what we're doing here. We were talking about buying a pivot level. Just like a couple of other trades in the past trade of the weeks. I think one time we never even got close. The market was holding up and the market making algorithms didn't want to come back and fill those buy orders. But yesterday we did get that. So going back to what it looked like here on the weekend when we called it, we basically looked for a pivot level, and the round number of 20 was used. Here we go. And so we were saying, do not chase these green bars. Look at what happened if we would have chased those green bars. We would have broken through, had about a half an hour or an hour of fun, and then it would have completely reversed. And that is the anatomy of a blow-off top or a topping tail or a reversal tail. Anything with a long tail after a couple of green candles is probably ready to settle back and dig in and hopefully build a higher low, build a base camp, and move higher. So, it's not bad. The price did trigger this morning. We gapped down through it and then traded back up through it. So it's kind of a wash at the moment. And considering what the market did today and yesterday, not a bad entry. I think we really allowed for the nastiness and the volatility to run through the cape of a matador and then turn around and wait for a better entry. So in a perfect world, I would think that this would be nice to see this stock maybe come down and do a nice little Joe G, a small narrow range day, and we have 3 days of pullback right on this rising moving average. This would be a perfect day for me tomorrow, and then hopefully that can move higher. What if we don't get that? What if Armageddon shows up and Beelzebub starts running through the streets and there's panic and fear? There's nothing that says you have to stick in this thing below the 20-period moving average, which is where the stop loss is. If you're in this thing today and the market opens up and we just start blasting lower, you always want to be looking at the backdrop of what the bigger picture is, not getting too focused. Now, if the market's just puking and your stock is holding a bid and it's actually ticking up a few cents, hey, no harm, no foul. But just manage the trade accordingly. And if the market, like I said, falls out of bed, get ready to be making some decisions. You don't have to stick around all the way to the suggested to the suggested stop. The suggested stop is not assuming that we're in a market crash. The suggested stop is assuming that there's some semblance out there. So the trade of the week in Sohu is live. Again, to recap, we picked it because of the basing nature of the individual stock versus the broken nature and the volatile nature of our bigger picture indexes. Going forward, again, I showed you what the ideal trade would be, maybe a nice narrow range day tomorrow that settles in and creates a new higher low, and off we go. But a lot of people were looking for turnaround Tuesday today. They did not get turnaround Tuesday. That's an old market axiom you've heard many years. You'll have like a weak Friday, a lot of fear and panic as people read the Wall Street Journal and the IBD over the weekend. They come in and sell their orders on Monday, capitulate Monday, and then turnaround Tuesday is usually a recipe for the bulls to hope for some sort of a bounce back. We did not get that today. So speaking of seasonalities and trading almanacs and things like that, we didn't get what I think a lot of people were looking for today. So keep that in the back of your mind. Well, again, I don't have a whole lot to present in terms of trade ideas, functionality, and things like that. I think the market's a complete mess. And so what I wanted to do was go through my sector analysis along with you guys And if anything catches my eye as strong or weak or indifferent or neutral, we'll talk about that. So this is the TLT, meaning this is the treasuries, and it probably makes a lot of sense to see the treasuries upticking as our markets are downticking. People are going into bonds as they sell and raise proceeds in stocks. Not a lot to garner from that, but not surprised to see that. And then also gold held up again today in the face of a rough day. Now semis, this one was kind of interesting. Semis got beaten up pretty bad. But the first sector on the board here that has to do with stocks is the SMHs. So they're holding up okay. They're in the neighborhood of not performing down here because they're heading back door into lows, and they might want to test those lows. But nonetheless, they did have a rather buoyant day today. Now we get into the gold miners. That's an interesting daily candle, actually. Just like the opposite of Sohu, I said, the blow off top. Well, this GDXJ, it looks like, has a nice blow off bottom, kind of came back and filled that gap. I wouldn't be surprised to maybe see some more defensive movement into the gold miners. But as we zoom out and look at these charts, there's really nothing inviting or nothing special about this chart. It just has a decent candle today. Oh, the home builders, they're under pressure. They're continuing to trade under these moving averages, which are rolling over. Not interesting at all. Here's silver. Similar to the gold miners today, had a nice bottoming tail. We might see a gap up overnight in silver. It's very possible. Okay, the biotech's looking pretty ugly, all right? Even the news out there. I don't like to focus on the news. I like to focus on the price action, but lower high, knocking on the ice, looking for the crack in the ice here. It looks like the biotechs want to go lower. GDX, same as the GDXJ. The commercial real estate, just kind of in no man's land, can't really get out of its own way there. And the IYR, nothing really special. Here's healthcare. That too is also looking rather similar to our market indexes. Could be trying to put in a head and shoulders bottom, but we thought that was possible with the bigger indexes, but didn't get what we were looking for there. Airliners rolling back over. Now this one is really puzzling. Usually I kind of know what's going on. Maybe you know, Andy, but why the hell is natural gas just closing short funded hedge funds that are focused on energy and things like that? I don't know what's happening, but the price is telling us that this thing has just absolutely gotten bonkers. Got way ahead of itself up here, pulled back down here only to find some close support of these beautiful fanning moving averages showing momentum on the daily and then pushing back up. So a lot of crazy volatility when you go over and look at oil itself. Oops. Oil is having a really rough time, and we'll get to that. I got ahead of myself, but very ugly. Look at how the 10 period on the daily chart is walking this thing to the woodshed. I mean, it can't even get to close to touching it. It's repelled by it, and then a horrible candle taking out and closing on lows this morning. Not looking good in oil. And the banks, well, they're not looking great either. I mean, Goldman Sachs is technically a bank, even though they're a scumbag hedge fund. I don't like Goldman Sachs very much. I don't think people should be rewarded for short selling derivatives on one floor while turning around on the other floor selling those to municipalities and small towns and pensioners. Not cool. I don't like those guys at all. So I'm happy to see this chart. And on the heels of financials and banks, that's concerning. Remember, I showed you guys the banks, Deutsche Bank and Credit Suisse. Well, our banks are not looking that great either. So KBE and regional banks looking like they want to roll back over. And remember, that's what Deutsche Bank looked like a few days ago. Now Deutsche Bank looks like that. There's the NASDAQ. We've talked about that ad nauseum. The spiders, we've talked about that. Technology is going to look just like the NASDAQ. IWM, the Russell, we talked about that. Here's the brokers. So the brokers, as people have a harder time trading and making money and punching tickets, the brokers are going to suffer a little bit as well. So those are not looking that great either. There's really nothing looking that great. It's just a matter of what's worse than the others. And I think we'll go back and rehash what we've seen here. China having a rough time as well. Here's our financials again. Solars can't get out of there is really nothing that looks good. There's our energy. This is having a lot to do with oil, guys. The oil prices are really hurting these guys. They're going lower. That's one of the uglier looking charts out there. Retail, a new low after breaking down. Target didn't help. Gap stores after market today didn't help. Steel, well, lower highs all the way down the road. There's nothing, the president can talk about UK, American steel and rebuilding, but until the price action changes, it's still tremendously under pressure. So there is OIHs as well. So the energy sector, the financial sector looks horrible. What else? Biotechs look horrible. The only thing really trying to hold up are the gold miners, in my opinion, and that's a defensive play as well as the treasuries. So guys, when we've done this before in past webinars, we've gone through this drill. There was usually 2 or 3 sectors that looked okay. This time, I can't find a single one. So I'm not going to be doing any recommendations of price alerts or setups today. I just wanted to kind of break down and go through, and on the heels of what JC said, we are seeing expansion in the downside participation. It's not getting better, it's getting worse. So with that said, anybody want to look at charts? I mean, pretty much all the charts you guys throw up to are more or less going to be broken, but if there's something that's out there that's giving you guys trouble that maybe you're in and you're not sure where to possibly pull the trigger to get out or what might be ahead, we can take a look. Let's see if we get.
And Winfield, yeah, to your question, do you think the German banks' problems will spill over into the U.S.? And all I can say about that is trust the price action, because you're going to hear things about the banks being much more stable than they were in 2009, stress test, blah blah blah. Much stronger than they were back then. It's yeah.
CEOs lie.
Remember Jim Cramer pounding the table on Bear Stearns, saying they were fine, and 2 weeks later they're taking stuff out of their office. Yeah,
he's just being ignorant. But talking heads, don't listen to them. I don't know if I can quite portray this again, how serious this could be. To answer your question, Winfield, Deutsche Bank is the global leader in derivatives. They are now at an all-time low. I don't know how that cannot affect us at some point. So, all right, I see a couple of stocks coming in. PLNT above the 50. Let's see what it looks like. Also helps to know if you're in it or not thinking about getting into it. Well, what this has going for it for sure is the filling of the gap, so that's good. It is back above its 50. They're a little crossed. Not a bad chart. This is Planet Fitness, huh? People getting their fitness on. Not a bad chart. And I'll tell you what, this entry is a hell of a lot better than buying the breakout up here. These guys up here wish they had the opportunity to pick up something down here. So it doesn't look bad. It's not bad at all. Can't say too much bad about that considering the market drop in the background. Twitter, I can almost see that one in my head. Oops, that's not going to help. I got to go to my cursor. Well, Twitter did fill the gap almost, but I kind of feel, guys, like Twitter is going to have a hard time distancing itself from the Facebooks and the Googles and the Amazons and the Apples, especially Facebook. With Facebook being down 40% and showing no signs of bounce, they're probably the closest thing you'd have to Twitter. I'm not a fan of Twitter either. I don't care what they're doing to their user base, but I don't know how they make money. It doesn't matter either. What matters is the price action. They're back down below all their 3 moving averages. This is definitely a major pivot, so you're going to want to watch this. You're going to want to watch this this 29.75-ish level for the most part. Today's lows really need to hold because you've got a reason for it to hold. The reason is you've filled the gap and you've got all this back here acting as support, as a pivot. What was prior resistance becomes current support, or should be. So that being said, if Twitter decides to bleed down tomorrow and close like that, beware. It's probably got a date with these lows down here. Let's see. All right, we'll do 2 more. XPO and Square and AMD. So XPO, been walked to the woodshed. We need to really look left here and see if there's a compelling reason for these bouncing levels. There's really not. It's just kind of the middle part of that trend over there. One candle, spinning top. It could be ready for a relief bounce. Transport, DJT, Dow Jones Transport, is what I thought would come up. Nope, guess not. Keep an eye on the Dow Jones Transport. It looks like that's a transport company as well. So that could be interesting. Whether or not it's going to be oversold enough to bounce, you just have to watch the close price action. I don't really see a reason for it in the history for it to bounce here. Two more, then we're out of here. Square, big gap down this morning, and then came right back up. The problem is this red line that was here coming into today, I think is still very significant. And so what happens now that Square bounced? It's bouncing right back up into resistance there. Support here. Bit of support yesterday. I think Square is going to have a really tough time with this area in here. So, keep an eye on that. If it can regain this pivot line and close above that pivot line, that would be a good start. All right, last one, and then we'll bring Scott in, is the AMD, and it's a good one to end on because the SMHs, as I said, were probably the best of the bunch, at least in terms of today's candle. And if we look at AMD, we can see it tried to break that 200-day and quickly got it back. And here we are again, tried to break the 200-day again and quickly got it back. So, there could be something going on here. What I don't want to see is just, a lower high back into test that level again. It really needs to clear these levels before it's going to do anything. It's under pressure for the most part, but you can tell it is doing its best to try and hold and fend off that 200-day. So that's rather interesting. All right, that's all I got. So let's bring in Scott and finish out what we've got to talk about here on some parting info.
Yeah, thanks, Steve. So on the way out, there's a couple items. There's a sale on deposits to get your Brokerage Plus in January. So go to trade-ideas.com/brokerage plus to learn all the details. There's only 1,000 spots available between now and December 31st, and that's all that's in the first wave. So learn the details at trade-ideas.com/brokerage plus to find out how to add automated trading to your subscription. There are a bunch of content available from our summit that we had in October. It's all great stuff. You can watch it all free. Trade-ideas.com/summit video 2018. We do have a podcast. No new one this week, but you can subscribe and listen to the last week's, and then the next one will be out the week after. Trade Ideas Podcast is what you search for wherever you listen to podcasts. We hope you all have the ebook that teaches you how to survive in the kind of market we've been having. 5 Ways to Win in a Post-BTFD Market. Steve and Andy both contributed chapters. Go to trade-ideas.com/ebook to get that delivered to your inbox. There's a sale between now and Thursday night, the Thanksgiving sale. Good Gravy code saves 20%. You just use that before end of the day on Thursday to do a new subscription or an upgrade. It'll also work for upgrades now. So use that before midnight on Thursday to do that. Now, if you want to dawdle a little bit, this code's good to the end of the month. Save in November is good through the end of the day on Thursday, on the 30th. And depending on the day of the week that is, it might actually extend until, that'll actually be good until about the 4th of December. So if you just decide you want to sit on it and not save the extra amount, save in NLV is all caps that code. Otherwise, Good Gravy gets you in by Thursday night. So all that's going on. If you have any questions about how any of that works or how Brokerage Plus works, email info@trade-ideas.com. That's our help desk. You'll get the best answer possible from our support staff. You can follow Steve at Today Trader and send him a DM or whatever. Ask him questions. We also have @TradeIdeas on Facebook.com/TradeIdeasPro is how to find the page on Facebook to like. So you can share stuff with your friends. That's about it. We're going to have a recording up later on tonight or tomorrow. And other than that, I think we are only having the morning educational webinar tomorrow, and then the afternoon webinar is canceled, and so are the Friday webinars. So everyone enjoy a safe and happy Turkey Day holiday. Don't get overstuffed, but do get a little stuffed. Thanks, guys.
Tryptophan high. All right, thanks.
Happy Thanksgiving, everybody.
Bye.
Bye-bye.
Bye.